Hey guys, what's up? How are you all doing? I am your friend Swapnil here, back with another episode of the weekly financial education series. And this week's topic is about the ongoing issue that is at the top of everyone's mind. And yes, it is about the coronavirus pandemic that has spread throughout the world and affected so many lives and economies across the globe. I don't think that in the recent 2 or 3 decades we have seen any crisis of this magnitude before. This is really unprecedented times, and we are actually everyone is going through tough times and difficult times during this crisis. So we have been receiving news and we have been seeing receiving instructions from doctors and other health experts on how to keep ourselves fit and healthy during this time so that we can improve our immunity and ensure that we stay away from the coronavirus attack. But at the same time, we also need to take steps to ensure that we are financially fit during current times also, because as we all know that this crisis has had a severe impact on the economy, and because of the lockdown measures which are necessary to prevent the spread of the virus, the economy is actually, when it's not in a very good shape and it is struggling. So, and that automatically means that it will have an impact on the people living in that country as well, in terms of maybe their wealth or job security or financial matters. So, what are the steps that we need to follow to ensure that we are actually shielding ourselves from any financial adverse impact that this crisis may have? And what are the steps that any normal person can take to ensure that he or she is actually financially fit and immune to the impact of this pandemic? So, keeping that in mind, I have prepared a 20-step financial fitness plan that can help to ensure that all of us can see through this storm without getting adversely impacted. So, let's get started. So, what is the step one? Step one is emergency fund. I can't stress the importance of this step enough. I even covered it briefly in my first video. So, emergency fund is basically any fund that you keep aside for meeting any crisis or unforeseen calamities. So, basically, emergency fund should be at least 6 to 9 months worth of your expenses, and this money is strictly for meeting any contingencies or emergencies. So, it should not be used for any other purpose. You should not use it for your you should not use it for your discretionary spendings or investments. This is only for a crisis. Treat it as a crisis fund. Step 2, liquid cash. So 20% of the emergency corpus that you have saved should be kept as cash with you for any immediate expenses that may come up. Step 3 is liquid fund. The remaining 80% of the emergency corpus can be kept in a mixture of sweep in fixed deposits offered by banks and as well as liquid funds. There are certain funds like Axis Liquid Fund that will allow you to do instant redemption up to rupees 50,000 in a day. So like whatever money you have kept in that Axis Liquid Fund, in per day, if you want, you can immediately redeem up to 50,000, and via IMPS it will get immediately credited to your bank account. So this is a very good liquid fund. Step 4, cut down on your expenses. So it goes without saying that during the current times of crisis, we have to be careful about the expenses that we are doing, and we have to lower our unnecessary expenses at this time, and we have to stock up on our savings for the rainy day. The step number 5 is again stressing on the same fact that we need to maintain a high savings rate during current times. Step 6, very important, life insurance. If you have dependents, if you are married and if you have a spouse and children who are financially dependent on you, then this is a must. Life insurance is a must. Ideal cover for a life insurance should be around 10 to 15 times your annual income. Step 7 is health insurance. Similar to life insurance, this is also very important because if anyone falls sick during this period, then as we know that health treatment costs are rising day by day. So if we are not properly insured against such cases, it can burn a hole in our pocket. It can prove to be very costly. So we should have ensure that we have a sufficient health insurance cover, and preferably it should be at least around 25 lakhs, and it should be a family floater plan which can be used by anyone in the family. Step 8, top up health insurance plan. So as I said previously that we should target to have somewhere around 25 lakhs worth of health cover for the entire family. So it doesn't mean that we have to take a base cover of 25 lakhs. We can do something like this. We can take a base plan of say 5 lakhs for which the premium will be very minimal, and then we can take a top up plan of 20 lakhs or more on top of that. So how this top up plan works is like, first, whenever say you get admitted into a hospital and you apply for a health insurance, you inform the insurance company that you want to apply for that health insurance. First, your base cover will be utilized, that is the 5 lakhs cover will be utilized only if the, let's say, the treatment expenses go beyond the 5 lakhs cover, then the top up plan will come into picture. So likewise, you get the full coverage of 25 lakhs here, but the cost will be significantly less than as compared to buying a standalone base cover of 25 lakhs. So this is one hack you can use. Step number 9, do not stop the SIPs, my friend. If you have been investing in mutual fund via the SIP route, then please go ahead and continue with them. Do not stop it going by the current crisis in the markets, because this is the time when you can actually reap the benefits and make use of the low valuations in the market. So now with the same amount of money you can buy more units, and later when the market bounces back, it will give you very good returns. So don't panic and make hasty decisions. Continue with your SIPs, and if you have not been doing them already, start new SIPs for your goals. Step number 10, start investing in mutual funds. So you can pick some good funds to invest based on your goal and your risk appetite. As a thumb rule, if your goal is less than 5 years away, you should ideally invest in a debt fund. Similarly, if it is more than 5 years away, you can choose to invest in equity fund, because equity fund usually takes some time to deliver good returns. So that's why it's advisable to hold it for at least 7 to 8 years to get the expected returns. Next step, select stocks carefully. If you are directly investing stocks, you should be extra careful and use your judgment before picking any stocks. So ensure to study the business fundamentals thoroughly before selecting a stock. You should ensure that the company has sufficient assets and cash balance to tide through times of crisis, and it should not go bankrupt. It should not have high amount of borrowing. So basically choose good businesses to invest in. Step number 12, stay away from trading in stock market. I would repeat this over and over and over again. This is very important. Uh, I've known many investors who have burned their hands in trading. So don't do that, please. Guys, stay away from short-term trading, futures and options at all costs. Because even if someone gets lucky once and they make a lot of money, there are high chances that they may not be able to do the same the next time. We often see and heard and read about people who have made money from stocks, but the number of such people are very less. So you cannot replicate the same amount of success every time. Chances are high the next time you will lose more than what you had made the first time. So please stay away from trading and instead invest for the long term. So that is what the step 13 is about. Aim for long term. If you're investing in equity, either directly through stocks or through mutual funds, always keep a long term view, because equities take time to grow and you provide you the above market returns. So it goes via the market cycle. Sometimes the market will go down, sometimes it will go up. So if you keep investing periodically in equities, it will average out your costs. So like when markets are high, you will buy less units or less stocks with the same amount of money, and when the markets are low, you will buy more. So at the end of the day, everything everything will get averaged and you will get a very good return. So aim to hold the investments for at least 15 years to get good returns. Step 14, blue chips. So I would say this as a good advice for any investor, be a new investor in the stock market or an experienced investor. Everyone can benefit from this step. If you're not sure which stock to pick, I think you can just go for a blue chip company, because a blue chip company is a company which is a company which is actually financially sound, and it has all the required money and the cash balance and the assets to tide over emergencies and uncertainties, and it is also already a well established name in that sector. So in times of uncertainty and volatility, these stocks will protect your portfolio and generate decent returns over the long term. So you can be assured, you can rest assured that these companies will not go bust when crisis comes. So your money will be safe with these companies. So you may not get extraordinary returns, but you will get a decent return. So if you are just starting to invest in the stock market, I would suggest you start with a blue chip company. These are some of the good blue chip stocks that you can consider investing in, like TCS, HDFC Bank, Reliance Industries, Infosys, Larsen and Toubro, ITC, Eicher Motors. These are among the some of the good blue chip stocks which are actually very strong in their business fundamentals and can provide you good returns over the long term if you hold them for 15 years or more. But if you, let's say, if you are totally new to investing and you don't have any prior experience investing in stocks, then better go for mutual funds, because in mutual fund, an experienced fund manager does all the research for stocks for you, and they carefully select the stock and invest your money into those stocks to ensure that you get a good return over the long term. So if you are not sure which stock to pick and if you don't want to take the risk, as you are new to investing, go for mutual funds and let the experienced fund managers take care of all the research for you. Step 17, diversify your investments. So this is actually a very important step for risk mitigation. It will help to ensure that your money is safe during any times of crisis and when the market is volatile. So ideally, you should spread the investments across different asset classes such as mutual funds, stocks, fixed deposits, P2P loans, etc. So likewise, even if one asset class underperforms, the others will help to keep the overall returns of your portfolio positive. So don't keep all your eggs in one basket. Spread them across different baskets. That's basically what it means. Okay, so coming to the next step, peer-to-peer, P2P loans. So I think this is a very good alternative during current times of volatility, and I personally have benefited a lot by investing in this particular asset class. So this is basically a source of passive income for you. It can help to provide a monthly cash flow for you. So what happens here is basically you register as a lender with a P2P platform, and then there are also other people who register as borrowers. So those borrowers will actually post requirements for loans, like how they approach banks for loans. So they will actually approach these companies for loans, and as an investor you can see the list of loan requirements from different borrowers on these websites, and then you can choose to invest small amounts in each of them, starting from 500 to 1000. And then once the required amount of money for that borrower has been funded from by all investors, then your monthly payments will start. That borrower will start paying back your monthly EMIs each and every month, so that every month, so like every month you will get back your money in small EMIs. So this is a very good option for generating passive income and a monthly cash flow, lucrative one, I would say. The returns are also very good, and the best of all, it's not dependent on the market volatility, because here you're not investing in equities, rather you're investing in different loans. So there is not, irrespective of whether market goes up or down, you will keep receiving your EMIs. So this is independent of the market volatility, and if this is very good for people who are looking for a monthly source of passive income. So I can suggest few sites based on the ones which I am investing in and which I have good experience. So Lending Club is one of them. You can find the URL here, and another one is Faircent. So check out these two sites, and I would say you can start investing small amounts in them. It's a very good option. Okay, step 19, go global, guys. It's a good idea, I feel, to spread your investments across different markets, global markets like US, India. So that way you can take advantage of the economies from across the world. Even if one economy is not performing well, the others will still ensure that your portfolio is stable, and you can take advantage of the different economic improvements from different countries across the world. So if you are not already aware, Vested is a one such platform that allows investors in India to invest in US stocks and mutual funds directly, sitting from the comfort of your home. Sitting from the comfort of your home. So I have provided the link for that website here. Do check it out and let me know what you think. I feel it's a very good option if you are looking for investing in stocks like, say, Google or Amazon or Facebook or any other US stocks that you have dreamt of purchasing, but you never knew how to do it till now. This is very good, one good platform which gives you that opportunity to do so. So please check it out. Yeah, I've given the link. Do check it out and let me know what you think. Last step, guys, take care of your health. If you don't take care of your body, where are you going to live? So exercise regularly and consume a nutritious diet. Eat food that can help to increase your immunity, because as we know that people with less immunity are the ones who are more susceptible to this deadly virus. So eat healthy, exercise regularly, ensure to keep your immunity levels high, stay home, stay safe. Let us all join hands and defeat corona once and for all. Lastly, guys, as you may be knowing, I have written a book on financial planning and wealth management. The title of the book is No More Poor, Become Rich Today. So this book is available in both digital and print versions. You can purchase it online from the URL that I have mentioned below. And I have covered the A to Z of financial planning, wealth management, and all of my investing knowledge based on my research and my experience till now in this book. So, and all these are available at your fingertips for a very minimal price of rupees 49 only. So do check it out. I don't think you will regret buying this book. I strongly believe that once you read this book, you will have a very good understanding of financial planning, and you will be in a very good position to become a do-it-yourself financial investor. So do check out this book. Lastly, if you like this video, please subscribe to my channel. Hit that subscribe button below and subscribe to it, and then press the bell icon to get the latest notifications about my videos as and when I publish them. So thank you guys for watching this video. Share it with as many people as you can, and let me know what you think about this video by sharing your feedback in the comments. Thanks, guys. See you for the next episode.